Hey guys, Akil Stokes here. Welcome back to another Weekend Trading Edge video. If you guys are brand new, this is a video I put out each and every weekend, sharing with you the top trading ideas that are on my radar for the week ahead, and of course, some educational tips to help you become a better trader. If you are a returner, thank you so much for the support. We crushed the 55,000 subscriber goal that we had, so I gotta create a new one at some point, but thank you so much, and I appreciate that you guys are finding so much value in these videos. Speaking of value, got a lot of wonderful comments from the midweek videos I put out. Glad to see you guys made some money on some of those trading ideas. Just remember, especially if you're new, these are not signals. You're not supposed to blindly follow these things. These are just opportunities to show you how I analyze the market, to give you a heads up on what good opportunities may be available in the market. But of course, it's up to you to follow your trading plan if you want to actually exploit them and hopefully extract profit from them. So let's hop in. We got a few technical things to talk about, but before we do, want to do a little bit of fundamental cleanup. So looking forward at the week ahead, we don't really have too many high impact news events coming out. We do have interest rate decisions coming out for Australia and New Zealand. We do have FOMC minutes coming out, but that's about it as far as like the unusual stuff that happens in the market. The one thing that isn't necessarily noted is July 9th, which I believe is the deadline, the most recent deadline for the Trump tariff deal. So there are supposed to be a lot of deals getting done. So far, there haven't been a lot of deals getting done. So keep an eye on the market up to that July 9th point to see what happens with different countries and if those deals are going to be struck or not. That could certainly be something that affects the market. Now, looking back, something that affected the market this past week, in fact, yesterday, because this is a Friday, which is weird, but it feels like a Saturday because it's July 4th. Anyway, was our non-farm report and the other jobs numbers that come out with it. Now, I'll make this as simple as possible. The non-farm payroll is a high impact news event. It's something that the market gets all excited for. And I would say it's the biggest consistent news release that we have in the market. And pretty much what it does is it gives us different measures of our job situation here in the US. And what happened this past week is that we got a much better than expected number. Not only a better number than the forecasted, but a better number considering what the ADP on Wednesday, which again, I told you I don't really think means much or has much correlation, told us, right? We got a negative ADP, so people may have anticipated a more negative number than expected on the non-farms, and we actually got a strong number. Not only did we get that, but we got revisions from the past 2 months, and those numbers came out even stronger as well. So again, super simplified versions of what this means for the market. Strong jobs means strong economy. Strong economy means we don't need to cut or slash interest rates, and interest rates are what drive the market. Strong interest rates equal strong currency. So you can look at all of this as saying this should be pro-positive for the dollar, despite our President Trump still yelling at Powell to slash rates. So I don't think the market is going to expect any type of earlier interest rate cut than what it already did. There have been murmurs of like, maybe we'll see one sooner than September. I don't think that's going to happen. I think this jobs number supports that, especially since the Fed has said we are going to pay attention to the data. So with that being said, let's hop into what I care about the most, and that is going to be the technicals. So we're going to start here on the dollar yen, and you're probably bored of this idea already, but it's important that we keep revisiting this. If you guys remember the dollar yen, I put this in a video, I think last week, called like home run trades or something like that. But this was an advanced pattern formation that I took on a lower time frame to put myself in a higher time frame trend continuation trade. Now, just to follow up on what has happened, the market has consolidated, but it has consolidated in a way that is very positive. See, this formation right here is called an ascending triangle. It is a potential breakout pattern. I guess we can call it a breakout pattern because it has broken out. But it is a breakout pattern where we would expect price action to break out to the upside. And what typically happens in this pattern is you see that we have rising lows and we have equal highs, right? So although the bulls at the time weren't able to push past this magic ceiling in the air, I guess you can say, the bears also haven't been able to push price back down to a lower level. Each time they push it down, they get defeated at a higher and higher level. I look at that as being positivity for the bulls, and I expect a bullish breakout, and that's exactly what we got. Now, there are three ways to trade breakouts. There is the before, where you're establishing a position somewhere on one of these tests and you get involved before the breakout happens. There is the during, kind of like we spoke about the dollar Swiss last week, where you put maybe a buy stop right above here and boom, as it fires up, you get involved. And then there's the after, and that's what we have right now, where you look for the confirmed breakout, the breaking close above, and then you look for price action to retrace, take a little breather, come back to that original breakout point, and then you look to establish a position long from there. Bigger picture, there is still lots of meat on this bone, as we like to say. If we go up to the daily chart, I'll give you a reminder of where I'm looking for price to come to. I am still in this position looking for secondary targets, and we're looking at this mesh point right here. You see where previous support turns to resistance right around 71.50s, right around that area. So there is plenty of room and opportunity to get involved if you're someone that is trading this pullback. And I will tell you, even if you're not, as we always mention, if we get a fresh break, right? So if you're not able to get involved right here, wait for a fresh break, perhaps on a lower time frame. If we get that fresh break, then the same criteria applies. Wait for the pullback, the next pullback, and then look to buy it up until we get to that 171.5 level, where we can then reevaluate the situation. So dollar yen's been going good. Fingers crossed we can get up there. That will be a really big winner if we can. So transitioning from pairs that I'm very, very, very excited with and happy, we go to the dollar yen, which has been in my doghouse. And again, if you saw the video I did the other week about how I got stopped out of one trade and then I missed a 200 plus pip move by like a few pips on another trade, yeah, me and dollar yen aren't too close, but the relationship is getting a little bit repaired because we just had a nice winner to end the week. I'll show you that real quick. We had a cipher pattern complete here. I'm going to draw it on very roughly and quickly, but it's going to be an X to A, swing high to swing low, A to B, B to C, and we had our CD completion right up here. And this is an advanced pattern formation. Pattern formations like this typically form in periods of consolidation. I personally trade bats, Gartleys, and ciphers, with the ciphers being the most frequent of the three. So it was a nice little run right here. And again, something to pay attention to with these patterns is that we're not looking for full-blown retracements. As I mentioned, a lot of them form during consolidative or sideways markets. I'm simply looking for a move down to this 3D2. That's what we got. So my goal as a trader is I want to get in, I want to grab money, and I want to get out short and quick like a mercenary. Now, what's next is a bigger cipher pattern potentially, and we'll spend some time measuring this out. Our starting point right here is going to be our X leg, and the first thing that we're looking at is a clear swing. So I think 100 out of 100 traders can probably agree this is a pretty clear swing. I mean, it is literally all red candles. Yeah, right? I'm making the face if you can't see it, like, yeah, dummy, duh, right? So most traders, I would hope, can be able to identify this. Next thing that we need is a retracement. We need to come to a minimum of the 382. We do that, boom, that is going to be our B leg. So I haven't labeled these yet, but if I were to label them and work backwards, this would be our X, our starting point. This would be our A, the end of our first leg. This retracement right here, this first retracement would be our, nope, not that. It would be our B leg, up in here, up in here. And then next, we're projecting our C leg. And to do that, I'm gonna take my Fibonacci extension tool, from the high of my X to the low of my A, and then back up. And again, what I wanna see here is I wanna see price action blow through that 127, but not close below the 1414. And we do that just barely, right? There's no close enoughs or anything like that in trading, or if you do have close enough, you have a rule for it. Either we did or we didn't, and we did not here with that 143 even handle holding pretty well. So with that being said, we've got a nice C leg all the way down there. I'm gonna give myself some more real estate so I can draw it in. Here we go, or write the letter in C. And then for the D completion, I'm gonna go ahead and steal this original fib and draw it from the high to the low of my pattern. And we're looking for the 786 to be hit for our D completion, which is gonna be right up here. So we combine all these together and we have an X to A, an A to B, a B to C, and a C to D right up here. Keep in mind, this is a very large pattern, right? We're completing up at about 146.90s. The X leg is at 148, so there's a very big range there. So just keep that in the back of your mind when you're considering your risk profile and stuff like that. But this is a potential bearish cipher, and if dollar yen, if we do see some dollar strength pushes up, this can be the next area in which you're looking for shorts. Next up, we're heading over to Pound Canada, and Pound Canada has given us an interesting last few days. Today is not technically completed yet, but I don't expect too much movement, seeing how, again, it's a holiday here in the US and all the other markets are closed. But we had a strong high momentum bearish candle, this big red guy right here. We had a doji candle, right? This little spinning top type thing, which is a spinning top looking type of thing, which is a sign of indecision. And usually what we would look for after this is something called a 3-bar reversal, where we would look for a higher high, higher close to give us confirmation of a potential bullish move. In this case, we don't. We don't necessarily have an inside bar because the wick does penetrate the highs, but we do have a bar where the body completes currently completely within the previous candle. So with my years and years and years and far too many hours spent on price charts, I can tell you that when we go down to a lower time frame, this is going to look like the sideways shuffle, right? The wounded crab. So as we go down to the 4-hour chart, you'll see exactly what I mean. The market is pretty much just going sideways. And for many traders, this looks like POJ, right? Piece of junk. But I personally love it as a structure-based trader because this allows me to set up my trades in both directions and then just sit back and wait for the market to tell me what it wants to do. So in situations like this, what I do is this. I want to draw out a line, right, at the high of this consolidative area. I want to draw out a line at the low of this consolidation area, and get your notes out because this is going to be very scientific, hard to understand technical analysis. If I didn't have glasses on, I would put them on at this point right now. All right, you guys ready? Here we go. If price action breaks to the upside, look for buys. If price action breaks to the downside, look for sells. Right? Rocket science, right? We always say, right, trading is simple. It's just not easy, right? So the concepts, at least in my trading style, the way I teach traders is this. I don't like to overcomplicate stuff, me not have big capacity in brain, so I like stuff as simple as possible. And I've had a very good trading career doing that. It doesn't wow people, doesn't get all the likes and stuff on YouTube. By the way, like this video on YouTube, prove them wrong. Prove that this type of analysis can get likes by liking it. If you don't like it, then you're proving me right, which would make me wrong, which is bad. Yeah, hit it. But the fact is, the best traders typically take a simple approach. The hard part, and this is why it's not easy, is because you have to be consistent day in and day out with this approach. And as human beings, that's just not something we're really good at, especially when money is on the line. But we're looking for a breakout one way or the other. Now, I'm not too interested in a breakout to the downside because if we go down to the downside, where are we going down to? Well, we have a previous important level that's right underneath this. So for me, don't really care about this. But the upside potential is a little bit bigger. There are two levels that stand out for me. There is a conservative level, which is going to be right here. I'll draw the zone. Bang. And then there's going to be a more aggressive level, which is right here. Bang. And you can see, especially if you go down to a lower time frame, there's plenty of room to trade it from these highs, and you would expect some type of retest as well. But these highs, let's call it 85s, right? Up to this first level, which is 86.63, and or to this second level, that is 87.50s, right? So keep an eye on that. Again, what we would need is, or what I would need is a break and close above this level to confirm that breakout. And then I would look for a retest to join. But of course, like we spoke about in the last one, I think it was the last one or 2 ones ago, there are 3 ways to trade these breakouts. You could always establish a position beforehand if you think that is, if you have some type of signal that says this is more likely to break out to the upside than not, or look to establish yourself during the breakout and do something like hide your stops right behind the breakout candle. Just curious. I'm curious what the volume looks like here. Yeah, volume starts to surge right above that first level. So that level we chose, that this first one's a pretty conservative one. I think that is a decent level. If not, I would say just anything underneath that 87 even handle will be a good conservative point to look for targets at. Next up is the NASDAQ. Yes, we look at this every once in a while, right? The NASDAQ, where we have a few things happening here. Now, one, the obvious thing, price has recently broken a previous structure high, creating a new high, signifying a bullish trend. If you couldn't tell already. And now we are currently pulling back. So price has given us a little bit of relief. I told you guys about the non-farm and the jobs thing happening. And if you are someone who is looking to buy, this is the perfect opportunity to do so somewhere in this level. Because I'm going to give you 2 points. I was speaking to a friend of mine yesterday he's looking to get into investing. He's like, hey, I spoke to this person. They said that the first step to getting into investing is just throw some money at an index or something like that. And Akil, since you're the trading dude, I want to know what you thought. And I said, yeah, the most conservative approach to investing, this is advice I would give to anyone that's new. There's probably a podcast episode on this, but is do some dollar cost averaging, right? Find the NASDAQ, find the S&P, right? Find some index fund and just consistently put money into it. Don't try to time it or anything like that. Just say every 2 weeks, every month, whatever your number is, I'm going to put that much money in. That is step one, right? What typically happens is as investors do that, they start paying a little bit more attention to it because now there's a direct reason for them to pay attention to it. Their money's in it, right? And as they pay more attention to it, they start to notice the ebbs and the flows. And I told them step two, if you want to get more advanced, is you go from just every X amount of weeks putting money in to now keeping a little emergency fund on the side and then trying to time specific levels. Like, well, how do I time specific levels? I'm like, that, my friend, is where technical analysis comes in, because you can actually see previous points of interest and you can see where, like, when price action comes to this previous low, this was the lowest low in blank amount of time, this would be a perfect and cheapest place to get involved in. And that's kind of the next level. And this is where technical analysis and investing work hand in hand. When it comes to my trading, I am technical first, fundamentals second. When it comes to my investing, I am fundamental first, but then technical second, meaning that I use fundamental analysis to look at the asset and gain its value. I use technical to pinpoint where I want to get involved at and what price point I think is the best to get involved at. So 2 things here on the NASDAQ. One, this is a nice level as we come back into this previous level of structure to look for buys if you're interested in a continuation. Another level, this would be a better level, but again, the risk is that we may not get down here, is going to be down here. And obviously on this chart, you can see its previous lows. You can see the reaction that price action has had a few times that we were here. Big rejection right there, big rejection right there, engulfment right there. So the market can't get past this level to save its life. So if we come down to these lows, this is definitely a place to in-sync it, right? Buy. I hope that was in sync. It could have been the Backstreet Boys. They're all the same to me. I hope that was the whatever. And yes. Anyway, that, right? You yes, do it. Let's go down to the hourly. And here's something else sneaky that we, it's an old strategy I used to use during day trading called the Fibonacci inversion trade, right? And what it's doing is it's pretty much, I'm taking my Fibonacci extension, I'm dragging it from our high right here to this low right there, and then dragging it back up. And what I'm looking for is I'm looking for a price to come down to this 1618, excuse me, Fibonacci inversion, which happens to come right at our previous lows. And what this does is it takes advantage of like a false reversal in trend, right? We look at this from the hourly and we see a move come up here and we see a little pullback right here and then we see that. And what the market thinks is like, oh my gosh, we broke this level. The bullish trend must be over. It's time for the bears to take control. And then that's just not the case, right? The bulls are kind of lurking for a cheaper price. and then boom, we get involved. Kind of like a complex pullback. In reality, this isn't a pullback at all. It's just a little bit of noise in the middle of the bigger move. So that's why it's kind of a tricky thing. I apologize. I explained that poorly. Again, you can go back and watch a video on Fibonacci inversions. I'm sure I did it better in another video, but just more confluence at this lower level of where I would be looking to buy at if we come down here. Lastly is going to be Bitcoin. I'm not a Bitcoin follower at all, but I did get a request to do some analysis on it. By the way, if you have a request, feel free to shoot it my way. You can use the comment section below. I've been doing more videos throughout the week, as you've probably noticed. So if you want me to analyze something for you, as long as it has enough for me to actually talk about, I don't mind doing a quick video for you. I noticed that there's not a lot of cool videos on YouTube of people actually showing ideas. Everyone's just teaching strategy. So this is a cool space you can come to if you're looking for something like that. Don't be shy about it. I do read each and every comment. But in general, Bitcoin is in consolidation, right? We've tested the highs once again, or the highs near the highs here once again, and we're retracing off of it. This is very similar to the pound Canada situation as we go down to our hourly chart, where we are coming to a very minor level of structure. And by are coming to, meaning we are at a very minor level of structure. This is, again, another one where I would bracket this pair. If we can take out these highs right here, then I would expect us to continue back up at least to this level right here, making a nice little day trading opportunity. However, and this one is the opposite of pound Canada, because the bigger move is to the potential downside. If we can break these lows, not just the lows of this doji candle right here, but the lows of this consolidation level, then I would expect price action to come down to these structure lows down there. So same type of philosophy, just be predictive in what you think the market may do, right? Measure out both sides, look at both opportunities, and then be reactive in your execution, meaning wait for the market to give you a signal that one is more likely to happen than the other, and then pounce on it. Speaking of pouncing, here's something you need to pounce on. Easy Trading Computers free building and buyer's guide. What I mean by that, it is a guide that shows you and talks to you about everything that you need to have in a solid trading computer. If you're a computer builder and you like to build them on your own, it's a great reference guide to understand what type of parts you should have in it. If you're someone like me who knows nothing about computers and perhaps you want more knowledge about it, or you actually want to buy a trading computer, they do that too. And I believe you get a discount if you use the link that I shared with you. But it's a great resource. I've used them twice in my career. I've been happy both times. It's free. Go check it out and be more knowledgeable about techie stuff. All right, take care.
Be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.